Hi everyone. Can you guys see me or hear me? Let me know in the comment box. Let me see. Okay. Give me 1 second. Hello. Let me adjust the mic in case. Okay, how about this? Okay, welcome to another IronFX webinar. Okay, I can see some of you coming in. So, hi Joha, hi Woyomi. Hello. Okay, just give the rest of the audience some time to come in before we start the session. So hello, I'm Annabelle. Today I'll be hosting the webinar series on mastering divergence in trading, right? Hey Terrence. Hi. So it's a Wednesday, 6:03 p.m. now. Let me know where you guys tuning in from. It's a Wednesday where I should be like chilling somewhere instead of hosting this webinar. Hi, Juhai. Okay. Finland, UK. Nice. Okay, maybe we should start the session, right? Thank you guys for tuning in on a Wednesday, right? I'm Annabelle and I'm hosting the session today, right? Talking about divergence in trading. So how many of you guys have actually heard of or used divergence in trading? Anyone? Right. Okay, there are some response. Do let me know if you guys have any questions because I have another section on my left that I can see all the questions, right? So let me know. Okay, before we start the session, maybe just let me bring you guys to our IronFX VIP portal, right? So at IronFX, we have a special partnership with the EFG, Everest Fortune Group, right? So this is our newly set up IronFX VIP portal where you can chit chat and have a one-on-one discussion with our prop traders, with Desmond himself or anyone in the office, right? So right here, you can come here to post any questions or take a look at any setups that we have that we post here. So there are some news that we update every day, and the major pairs or whichever commodity, indices, crypto, right? So you can toggle around the VIP portal, right, by highlighting zones. For example, Jin, okay, one of our prop traders, right? Wait, let me try USD JPY because I just did this. Okay, so for today, for example, I actually came here to post some of my comments, right? Highlighting some key resistance area. Yeah. So if you have any questions, you want to say, oh, will there be a breakout? What you can do here is highlight the breakout and then you can link it to wherever you want to highlight. For example, this line here. So confirm and then you enter. So all of the in-house traders will be able to see what you have commented and will answer you as quickly as possible, right? Our opinions or where we see the market is moving. So this portal is especially for our IronFX VIP members. As you can see here, right? What you can do is to sign up. Let me just copy and paste the link for you guys. Hang on, just let me go to. Okay, you can either come to this page here to sign up. Right, we have different tiers. We have different tiers. Or you can go to the IronFX page, the VIP room right here, right? Where you can see what the IronFX VIP trading room is for. So you get exclusive market forecasts. You can ask our experts, for example, Jean or Desmond himself, a one-on-one trading session, sort of. Make it more interactive of sort. Okay, you can request for market forecasts. And these are the tailored account types that you can go for, right? So for different price or different deposits, you get to access different tailored services from us, right? So yeah, please check it out. And also, if you want to see our past webinars, you can log on here to see past webinars, right? And click on English to see all the previous sessions that we have hosted. And for today's session, we are talking about divergence trading. It's also recorded. So if you miss out any part of this, you can actually log on to IronFX to check out, right? Okay, so without further ado, maybe I should start this session. Okay, so before I start the session, just a disclaimer. The information in this webinar should not be considered investment advice or an investment recommendation, but instead only educational materials only. So please do your due diligence before you trade. Okay, so that's me. Okay, Annabelle. So I am with, I'm working for Desmond in AFG. So AFG is finalist for Best FX Research 2019, 2020, 2021, and finalist for Best Equity Research 2020 and 2021. Okay. Okay, today's agenda on divergence trading. So like I've mentioned just now, how many of you guys actually have heard of or have used divergence trading? Okay, I have some response, right? Yes, it's a tool that you don't. Okay, yeah, some of you have raised your hands. Okay, that's great. Okay, okay, so it's a tool that you don't use it on its own because it's just additional support to confirm your reversals or to confirm your trades, right? Okay, I've heard of it but never used it. Okay, so this will be I'll keep this session as simple as possible because actually for divergence is a very simple tool to use. So the agenda for today, we'll be talking about what divergence in trading is, what are the indicators that you can use for divergence trading, the different types of divergence trading, and combining them for higher probability setups. Okay. Okay, so what is divergence trading? So divergence trading is when the price of an asset is moving in the opposite direction. So for example, I have a price, some of you might use a MACD. Oops. Some of you might use MACD. So, sorry, let me erase this. It's a bit messy. Some of you might use MACD. Some of you might use your RSI. RSI. So these are all oscillators. So they are quite similar. Or your stochastic, right? Depending on what you're familiar with, but the way they function or the way they move is quite similar. So divergence trading is when your price levels are going in one direction, for example, upwards, but the oscillator is telling you otherwise, right? It's going downwards. So it literally means diverge, right? So divergence warns the current price trend may be weakening, or in some cases, it may lead to price changing in direction. So in the following slides, I will show you guys the different type of divergence in trading, right? And for divergence, it's an indicator's way to tell you that there might be a reversal. So two key things that I want you to take note, meaning divergence in trading can mean reversal, or it could mean continuation. Okay, there's only two things that is trying to tell you. It's either a reversal point or a continuation, right? But it's not meant to tell you exactly where you should put your entry, or where you should put your take profit or stop loss. It's just an additional tool to your maybe Fibonacci, etc. Right? The other different tools that you use for trading to set your entry or take profit, stop loss. This is an addition to it, right? It's like a confirmation. So the different types of divergence, we have the bears and the bulls. Okay, I have some question. Can't see your screen. Oh shoot. Sorry, give me 1 sec. How about now? Can you guys see my screen? Hello, hi. Can you guys see my screen, or is it just me? Still not sharing? Okay, how about now? Hello. Oh dear. Okay, so you guys can see me, can see my screen now? Okay. Oh my God, I'm so sorry, guys, because I thought Desmond already said it for me. Oops. Okay. But luckily, we haven't gone to any of this part yet. So this is the important part that we should be taking note of. This is more visual. So, okay, let's start. So the different types of divergence, we have the bear and we have the bull. Okay. So for bullish divergence, we are always looking at prices that touch the lines from the bottom. Okay, so we always draw the line this way, right? It might be a bit confusing because when I just learned it, there are 6 of this that you have to sort of remember, but the key would be this 4. Okay. The exaggerated divergence is a bit not as effective or not as strong. So I would recommend that you just memorize these 2 categories, which is a regular divergence and the hidden divergence. An easier way to remember is I will separate the bullish from the bearish. So bullish, we always draw our lines at the bottom of prices, right? As you can see here, it's always at the bottom for bullish. And then from the top, if it's bearish. Okay, but these are the 4 that you have to remember. Bearish regular divergence, bullish regular divergence, hidden, and hidden bearish divergence, and hidden bullish divergence, right? These are the 4 important ones that you remember, because for exaggerated divergence, it's not so effective, but I do have some examples that I can show you guys later on, right? So let me explain further in details what are these. Okay, so I've came up with this chart to make sure that it's clearer for all of you to understand, right? This is the price level for the asset, meaning the price of the candles, right? And this is the level for my oscillators. Okay, sorry, it's a bit messy. Okay, so this is my price level, for the chart, my normal candlestick charts, and this is the for the oscillators. So in case you are confused, so this is the normal price, the asset price, and this is the oscillator price. Okay. So remember, for bullish, we are always looking at your price being drawn on top, right? Your line is always below. Okay, maybe I use below. Your line is always drawn below for bullish. Okay, be it this or this, right? So bullish, always remember your line is always at the bottom. Okay, and what I mean by that is it will create a lower low on the price. So this is my candlestick chart, and then a higher low on my oscillator chart. So for the purpose of this webinar, I have all used RSI as my indicator, my oscillator. So if you're more familiar with MACD or your stochastic or whichever you want to use, please go ahead because they move in similar manner. So what I mean by draw your line below the price, meaning to say your price is always on top, right? So the line is below, creating lower low, and on your oscillator, higher low, right? What it means that the underlying, it indicates underlying strength, right? So it's stronger. So what we are looking at here is for price to reverse in the other direction. Okay, price is moving this way, creating a lower low, and then your oscillator is telling you that, hey, I'm actually moving in an opposite direction. Maybe it's time to reverse, right? So it's a reversal. Bears are exhausted, warning of possible trend direction trend direction. Sorry, I'm tongue-tied. Trend direction change from a down to an uptrend, right? As for bearish, your line is always drawn on top of your price. So it creates a higher high, right? And your oscillator, a lower high. So higher high, okay, on your price chart, and then lower high on your oscillator. So it shows that, hey, maybe my price is gonna break. It's gonna go in the opposite direction, right? So it's a bearish divergence, regular divergence, this is called. Okay. Most of the time, from all the past tests that we have had, most of it are regular divergence, right? And the next one will be hidden divergence, which is not so common, but regular is the most common. So what does a bearish divergence tell you? It indicates underlying weaknesses. So bulls are exhausted, warning of possible trend direction change from up to downtrend. Okay. So this is for reversal, regular divergence. All right, just remember it as reversal, right? So lower low, higher low give you bullish. Higher high, lower high give you bearish. But these are both for reversals. Okay, am I clear? If you guys have any question, please feel free to ask me because I have the other chat open. Okay. Yeah, I'll try to keep this as simple and slow and understandable as possible, right? Okay. The second one, the hidden divergence. So for hidden divergence, we are looking for continuation, right? If this would be reversal, then this would be hidden divergence, but I can't find any relation with these two words. So just remember that regular divergence equal reversal, hidden divergence equals to continuation. Oh, sorry. If you guys want to take a photo of this, you can go ahead. So this chart, I have done it so it's clearer for you guys. Maybe I can. Okay, never mind. Okay, so this is for oscillator. Please take a snapshot if you need. oscillator, and then this is your normal price. Your asset, maybe I'll just write asset. Okay, so in case you guys forget, right? So this lower low is for your asset at the top of the screen. Later I will show you guys. Usually your top is your normal price, and then below will be the oscillator, right? Higher low will be for the oscillator. Same goes for this. So please take a snapshot if you need to. Yeah, I have a sweet. Okay. Next, hidden divergence. If you need to, take a photo as well. So like I've mentioned, hidden divergence would be for continuation. Okay, meaning to say for bullish, remember your line, your trend line is always drawn from below. Your trend line is always drawn from the bottom for bullish. Okay, let me highlight again. Bullish trend is always drawn below. Bearish is always drawn from the top. Okay, so for bullish hidden divergence, it means that it's creating a higher low, right? Higher low, and then your oscillator is creating lower lows. Okay, higher low and lower low. But in this sense, in this manner, it's actually looking at a continuation. So you can see here, although my oscillator is telling me otherwise, it shows me how my trend is still continuing. So it's an additional tool that I can use with my other indicators like my retracements to let me know that, hey, my trend is going to continue instead of breaking here, right? Because right at this point, for example, a lot of people might be thinking, oh, is creating maybe somewhat a triple top. Is it going to break here? Okay, some of these questions might pop up here. But with the oscillator, it's actually telling me that, hey, I have a support that is telling me that my trend is actually going to continue in a bullish manner, right? For bearish hidden divergence, we are looking at lower high, as you can see here, lower high, lower high, lower high, and my oscillator is telling me higher highs, higher, 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 right? So what these indicate is that for bullish hidden divergence, it's indicating strength, good entry or re-entry. So this occurs during retracements in an uptrend, and it's nice to spot during retest or previous lows, right? And here, same, indicates underlying weakness found during retracements in a downtrend. Nice to spot during retest or previous highs, right? It's a continuation trend. Okay. Okay, some tips that I have before I show you guys some examples on divergence trading is that for divergence to exist, price must have either formed a higher high, a lower high. Let me go back to my slides. Okay, here. Okay, so it must either form a higher high, a lower high, a double top, or double bottom. One of these must have happened before there is a divergence, right? So you don't have to rush in if you don't see it because it doesn't often occur. Okay, so make sure that they are drawn correctly. Later on, I will show you guys some examples of how to draw a basic divergence line. So keep price and your indicator swings in a vertical alignment, meaning to say if I have a bullish divergence, right, I will be looking to draw my, for example, this is a price. Okay, you have to draw in alignment, meaning this section instead of, okay, my drawing is not that great. Maybe I'll show you on the charts instead. Let me pull out my charts. Okay, for example, if you're looking at a divergence, make sure that it's always in alignment, meaning to say here to here and here to here, right? It's always in alignment. It's always starting and ending at the same point. Not like this. This is a bad example, right? You have your price here and then your divergence is here, or maybe your price is here and then your divergence is here. It doesn't make sense, right? So it always have to align correctly like this. It always have to start and end at the same time. So this is what I meant by alignment, okay? And then divergence also, if you guys are asking on which time frame it works well on, it usually is more accurate on longer time frames, meaning to say my H4 or my daily. But as a day trader, I don't think, or a scalper, I don't think you'll be using such high time frames. So my recommendation would be to use H1 onwards, because if you are going to do your divergence trading on a 5 minutes or 50 minutes, there will be a lot of divergence there, which might not be so accurate. So for longer time frames like your H4 and your daily charts, you get fewer false signals, right? Divergence on shorter time frames will occur a lot more frequently, but they are less reliable. So we advise 1 hour or above, right? Some traders use 50-minute charts or even faster. So in those time frames, there are just too much noise for us. Okay, it is very hard to trade on those time frames. Okay, so let's move to our examples. Okay, maybe I should test you guys. Okay, so for can you guys tell me what is this? Is this a bullish or a bearish divergence? Okay, never mind. Is it a regular or a hidden divergence? This way. I'll give you a hint. You always draw your line, your trend line below for your bullish. Okay, your bullish divergence, right? But now my question is this a bullish or is this a regular divergence or a hidden divergence? So is this a reversal or is this a continuation? I have a couple of answers. Most of you guys say hidden, okay, right? Is this hidden or regular? Right? Okay, so my refresher, if it's at the bottom, it's always bullish. Okay, that's the easiest to remember. So under bullish, there's only two types, either your regular or your hidden. So open is always hidden, right? Your regular is closing. And for bearish, your trend line is always drawn at the top. So for hidden, it's closed. And then for regular, it's open. So this one is the opposite. It's slightly confusing, but you just have to memorize it, or you can have this chart paste somewhere on your trading platform or somewhere where you can refer, right? So those who say hidden, yes, you're correct. So let's move to my examples. Okay. Okay, so here, right here, remember my number one rule is always to draw in alignment, right? Your price and your oscillator must be in a correct place. So price is testing a key horizontal resistance level, which is here. Okay, my drawing. Okay, so it's drawing a key resistance. It's testing, sorry, a key horizontal resistance level with price making a smaller high. I don't know whether you guys can see it, but it's from here to here. So one is below the dotted line and one is above the dotted line. It's a slight inclination, okay, if you can't see, but that's what they're portraying, upward trend. Okay, it's just trying to show you that it has moved from here to here, okay, resulting in bearish divergence with RSI. So this is the RSI indicator, our oscillator. Our descending resistance line on RSI caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here, right? So this is a bearish divergence that we are looking at. One is open. Okay, so this is an open bearish divergence. Okay. So what they're trying to show you here is that there might be a reversal because we have caught 2 points here and then it's going in the opposite direction, right? So it's a sign to show you guys that, hey, actually it's going to reverse from here. Usually where you should take note is at the opening and the closing. Okay, usually the closing, because you have to think of how you want to take your next trade, right? Especially when this is a reversal tool that you should use, that you can use. So other than this, sometimes you can throw in your other indicators, like maybe your retracement tool to see how far it went. Maybe you're looking for a projection, or maybe you're looking for an extension or expansion, right? So for reversal, for divergence trading itself, it's an add-on, it's a additional support to your entry, or additional support to your thesis, where maybe, for example, you feel like the price here should have reversed, but you are unsure whether it will continue or it will reverse. So this divergence trading will help you to add maybe the 10% or 20% that you need for confirmation, right? Okay. So repeated divergence, what they mean by repeated divergence is, as you can see here, the price is going up and then my oscillators is telling me otherwise. So this is a bearish divergence, right? Price reverse. And then I have another bearish divergence, right? You will be thinking that, hey, maybe the price should come down. Yeah. So price came down. Okay. So repeated divergence means, it just means that price repeatedly reverse, and it usually tends to be stronger on the second time, on the second repeated divergence. Okay. Okay, divergence potential. So what we mean by divergence potential is, you might be wondering how far my reversal might go. Okay. As an indicator itself on its own, it wouldn't tell you where it will go, right? It could actually potentially go here. I wouldn't know. So using the divergence trading skills, it won't tell you exactly how far, but as a rule of thumb, most of the time, it should come back to where we started. Usually, but not all the time. If you can actually put this together with your retracement or your other indicators, your projection, or your other indicators on the RSI, it will work better, right? Or maybe your trend line, your support resistance line, throw in all of that to give you the additional support to make sure that your take profit or stop loss is correctly placed, right? So always take note of where the bearish divergence starts, as this is the level where it would tend to reverse to. So for all our previous back tests, or those that we have tried, tends to move towards yes, where it started, right? Or the previous swing low or swing high. Okay, so right here you can see the bearish divergence here to here and then here to here. So price is going to reverse, right? So just now they mentioned that your price usually comes back to test where it starts from, where your divergence starts from, right? So it came back here to test. Price reversed to where the divergence started to occur. Okay. Yeah, so this is one of the questions I had, is because, for example, if we are looking at, let me go back to the slides. So for example, if we are looking at our exaggerated divergence, right? Because the question is, how far is my reversal or my continuation going to continue to, right? That's usually the question. But if it's an exaggerated divergence, you wouldn't know how far it will go. So right here, how far it will go depends on other indicators like your resistance line, your support line, right? What's your trend line, your FIBs, your extension, expansion, projection, all this add together, okay, to show you how far it will go. Because exaggerated divergence, you will never know how far it will go. In essence, exaggerated divergence actually means double top and double bottom, as simple as that. And one point to also note, for this is special because it can only happen in this scenario, meaning to say, if I have a double top, right, I'm looking at my oscillator only this way, only on the bearish signal. And if it's a double bottom, I'm looking only at my oscillator being bullish, sorry, because it can't happen when this, for example, one of the question I had was, it can't happen if my oscillator is going upward, correct? Because this is for bearish, right? So this is my bearish exaggerated divergence. It can only happen if it's going downwards. It can't happen if it's going upwards, right? Okay, so take note, it can only happen in these two scenarios. Okay, so maybe let me continue. Yeah. So back to what I was saying. Usually the question tend to be, how far will the reversal go, right? So it tends to come back to test the level where your divergence started to occur. Okay, it can be on your H1 time frame, your H4 time frame, or your daily. Okay. Okay, so forecasting breakouts with divergence. So what they mean by forecasting breakouts? So sometimes if your, for example, if your trend is very strong, like your USD JPY, right, is always constantly moving outwards, and then you must be wondering when your price is gonna break this to come down, correct? But you always have this question in your head. Whatever goes up must come down. So the key is when and to how far it will come down. So what we have here is our RSI telling us that, hey, we have a bearish divergence. And then my price has actually broken my trend. So usually it is better that it occurs at the asset level instead of the oscillator, meaning to say, it will be better if the prices of the asset shows that it broke instead of the oscillator. Okay, either one of them, so long as one of them breaks and is showing bearish divergence, it's telling you that, price is going to reverse. So forecasting breakouts is when one of the price, either your oscillator or your asset price, shows you that, hey, I actually break out of my trend or my channel. Okay. So either one of these shows you that and is actually telling you that, hey, I have a bearish divergence, then it will reverse, correct? Because sometimes the problem is also if you do not have this RSI. For example, we ignore this. Okay, we ignore this RSI and then we just solely look at the price level. If my price actually came here and broke slightly, okay, maybe I'll use a highlighter instead. Okay, if my price came here and first candle, the red one, it broke. But given that it has such strong bullish trend, would you think that this is a fake breakout? Could price actually have broken here but came back again? Happens quite some time, right? Like this is a common false breakout scenario that you will see very often, correct? So what this RSI or divergence shows you is that it preempts you that, hey, okay, it's a confirmation that, you know, we are gonna break. We're gonna go in a reversal trend. Okay. So it acts as a confirmation or additional support to your trade. Okay. So RSI broke the ascending support line before price did, right? It broke. This forecast that price might break it. So price is barely breaking out of the ascending support line, but shows strong recent bearish divergence, right? So one is going down and one is going up in the same alignment, same area. So here the price already broken out, but here hasn't. So it's suggesting, it's actually signaling you that a reversal might happen. So RSI breakout plus bearish divergence plus price breaking out equals to high probability. So it's equivalent to your Fibonacci confluence trading, right? 10% plus 20% plus 20%. That gives you actually 50%. Okay, with other indicators, maybe it'll give you an 80% confirmation that, hey, this trade might be good for reversals. Okay. And always take note that price tends to test where your divergence starts. So technically it should be about here. Or if you have other support levels like your overlapping support resistance or your swing high or swing low, it will be good that you can associate that and combine it together to make it a stronger take profit point. So right here is another example. Maybe 1 second. What's the setting for RSI? I'll answer that later on when I go to the live trading platform. Okay. Okay, so RSI breaking out of descending resistance right here. Okay, you can see that my price already broke out of my trend, but it's not so for my asset price, right? It broke on my oscillator RSI, but it didn't break here. So what happens? Do you guys want to have a clue, have a guess on what happened next? Okay, I have some answers. Price will that do? Okay, some say will reverse, some say that it will break the trend. Okay. Okay, so what happens next? Okay, so price is now testing the descending resistance line, and yeah, you must be wondering whether it will break. Should it break? Common question right at this moment will be, is my price gonna shoot up, or is it gonna break out or reversal, right? Breakout or reverse? Very common question at this point. This will be where all the commotions, all the fighting happens, right? So on my oscillator, it's actually showing me that, hey, my price has already broke out. And then it's showing me that I have a bullish, right? Because your price is drawn below. It's a bullish divergence. Okay, I have some answers. Pull back, then continue going up. But yeah, that's a common answer. Okay. But what happens? You see, it didn't pull back, right? I have an answer that says pull back to continue going up. Yes, that is common because history tend to repeat itself, right? So it will create a lower low, lower low, and then maybe another lower low. But no, it didn't. It chose to break out, right? So remember on my first slide, which is for your regular divergence is for reversal. So R and R, reversal, regular divergence, and then your hidden divergence is for continuation. Okay. So right here, it chose to break out. Okay. So it has broken out of my trend in continuation of a bullish momentum, right? Okay, so let me go to show you guys some examples on the live charts. Okay, I will give you some examples on the, sorry, give me 1 second. Okay, so I'll give you some examples on the H4, the H1, and then on the daily, different examples of whether it's a exaggerated divergence, whether it's a hidden or regular, right? So you have some different examples to learn from. So this is the AUD USD 4-hour chart. What I wanted to show you guys was, I think it's this. Wait, let me just adjust the colors. Okay, so what I wanted to show you guys is here, right? Your exaggerated divergence, it's not that strong, so your swings might not be that much, that great, but I'm just showing guys examples. And one more tip that I want to give you guys is that for this divergence trading, it takes a lot of practice because it's about spotting them, right? I can give you 100 charts, but if you can't spot them, there's no way that you can have this additional support, right? So if you want to learn it properly, I suggest that you go to your charts and just try to draw as many as possible, right? And at the same time, also remember whether it's a bullish or bearish, whether it's a regular or a hidden divergence. Okay, that will help. So right here, I have the exaggerated. When you draw below, it's bullish, correct? So you have your exaggerated divergence. So what it means here is for continuation, right? So from here to here, right here, you might be thinking whether it's a double or a triple bottom given the 4-hour. If you go to the 1 hour, it might be clearer. So for this exaggerated divergence, it's actually showing you that it will continue upwards, right? Okay. And then right here, let me just spot a couple of others. Okay, I think what I'm going to show you guys. Okay, maybe this might be a good example. Okay, so you might be wondering, right? Okay, always draw to the same segment. Okay, so you might be wondering whether it's gonna break or it's gonna break this line, a breakout, or it's gonna reverse, right? Or is it gonna break out or continue in the bullish momentum? So right here, my oscillator is actually telling me that it's going downward, but right here is showing me a sort of double bottom. So for exaggerated divergence is always in continuation of where the trend is going. Okay. And then lastly, let me see. Okay, yeah. So my tip to you is also to spot, because sometimes it's not easy. Okay. Let me try. Okay, from here to here. Remember, it's not 100% guarantee that it always works. Okay. But for example's sake, I'm just showing you guys what it is. Okay, so from the start to the end, right? So is this a regular or a hidden? Remember, for cut here. Okay, example purpose. Okay, so what will happen here is that you might be thinking, hey, actually I can even pull back further. Maybe here, right? Okay, okay, this works. Okay, so remember when you're drawing at the bottom, you're looking at bullish, and then your question here will be, is my price gonna break this level here? Oops. Is my price gonna come down, or is it gonna continue? Okay, so your first question to yourself is, hey, my oscillator is showing me a divergence trade, right? So at this point in time, you may actually pull out your other indicators like your retracement tool, okay, to see whether there is a nice confirmation on the level. For example, wow, this is a very nice level. Okay, so right here, there's a 127 level that we are looking at. This is the Fibonacci extension, right? A very nice reversal point here, in addition to our divergence trading skill tool, right? So what I can see here, I already take profit. Okay, so the other thing that I want to highlight is also, it tends to come back to where you start your divergence, right? So we started here, it should come back nicely there. It tends to, but if there is a strong support somewhere um, to actually give me the additional confirmation, that would be better. So what I can see here is that this zone might be where I take my profit for the reversal. So this is a regular divergence trade, right? Because it's reversal, right? It's reversing in the opposite direction. So I would have taken, oh, this is very nice. So it's also aligning together with my previous swing low about this zone, this green zone that I highlighted, right? So this is how we use divergence trading together with all our other tools in support to give you this fine-tuned take profit or stop loss levels, right? Because on its own, you can never have a entry point or a stop loss point, correct? Okay. So the second example that I want to show you guys, maybe I show you guys, we only have about 5 minutes. So I will show you guys on a H1. So you guys have a different idea of how it's like on different time frames. Okay. So right here, okay, this is for example purpose. Okay, I have here to here. I usually use my this line to show me exactly where my alignment should be. So if my trend line is this on my asset, then it will be here on my oscillator. So it's showing me that there is a continuation. So this is a hidden. This is a hidden divergence, right? Okay, so I have this few, even if it's a very little move, right? A very simple, a very small inclination, it's still considered, okay? So right here, you'll be thinking, oh, it's my trend, right? This is a live chart. So you might be thinking, hey, is my live chart gonna continue in a is my chart gonna continue in this bullish momentum? Right here, is it gonna break out? Is it gonna continue? So with all my other indicators like my Ichimoku cloud, my diverse my divergence trading tool, as well as maybe let me try to see whether there is a level here, as well as my retracement tool. Let me see. Maybe price should continue to go to the 127 before it actually reverses, right? Because it's actually showing me that it's gonna continue in this trend. So at the back of my head, I will know that, hey, I'm looking at actually a potential continuation. So if I want to do a reverse trade, I would observe longer and then maybe take a reversal here, because right here I do not have much of a confirmation, right? Okay, I only have my Ichimoku cloud. I don't have an extension or a Fibonacci confluence area that I'm comfortable with, and especially there is a zone here. I might be taking note of this, right? This is a previous swing high which it failed to break, only at this area, but it pulled back. Okay, so this is a very dangerous area that I'll be watching out for. So what I'm trying to show here is that, okay, for this hidden divergence trading is actually showing you that it's continuation. Okay. Okay, this is on the 1 hour chart. So you can also spot divergence trading on 1 hour charts. Okay. Okay, I will try a last one. I think a good example would be, let me try. I'll try a daily. Okay. I'll try it on the daily chart to show you the difference. Okay, so daily charts is way much cleaner, but for if you're scalping or if you're a day trader, it might not work because it will take a long time. Okay, but it might be a better setup this way because it's cleaner. So right here you can see here and here, right? So this is a hidden divergence. Okay, sorry, I mean this is a regular divergence, but this is a bearish divergence because your trend lines are drawn above, correct? Okay, so I start here and I stop here. So it has to be the same exact, right? So remember, if it's a regular divergence, your price tends to reverse, correct? So reverse to which point? It tends to reverse to where you start your divergence trading. So with that, maybe you can throw in your trend lines or your retracement levels. Okay, it'll be great if it aligns exactly or perfectly, but it doesn't happen all the time. It happens sometimes. Okay, it's just highlighting the zone for you to fine tune your take profit levels or stop loss. Okay, so this is the level that I'll be watching out for, right? If I will do a reversal trade here. Okay. Okay. I've come to the end of my session. I actually have quite a bit of examples that I want to share with you guys, but because of time constraint, I have another webinar to go to. I'll end this session here. If there's time, we can continue in the next session. Thank you guys for tuning in, and yeah, I'll see you guys in the next session. Thank you.